Welcome to Sovereign Albion. I'm Andrew Bennett. For the last year, I've been wrestling with what AI sovereignty means for us here in Britain. It's absolutely not about isolationism or autarky, but it is about how we acquire and secure the capabilities we need to control our destiny for the long term. But what does that mean in practice? Semiconductors have clearly become a strategic choke point, but even when you look at the Netherlands, which is home to ASML, the monopoly provider of EUV machines, which are critical to fabricating chips, but cannot even leverage that position in the supply chain. What is sovereignty really when it's interdependency all the way down? Elsewhere, you look at the US and they have this astonishing AI capex build out going on, but is that really the right strategy for us in Europe when we have our energy constraints, our compute constraints? And then the state capacity, which is critical to industrial strategy actually going well. What will it take for SovAI, the government's new AI strategic venture fund, to succeed? To explore these questions, it was really fun to catch up with my friend Lawrence Lundy-Bryan, who has just launched Europe's first dedicated semiconductor fund, Cloudberry. He spent his career going deep into frontier technologies and has thought more than anyone I know about this interplay of AI technical progress, structural shifts in venture capital, and UK sovereignty. It was a brilliant conversation. Let me know what you think.
You just launched Europe's first semiconductor VC fund. Why on earth would you do that?
The truth is, I think I've jumped on the bandwagon here. They're like Vera and Rene, my partners, did all the hard work. There's sort of a VC bet that I'm making, and then there's a macro bet. The VC bet is there's only going to be two types of VC funds in a decade. The capital agglomerators, the AUM, the Andreessen 15 billion, 4 or 5 funds or whatever, Sequoia Benchmark, those guys that just raise all the money, and then specialists. I'm not sure exactly the extent to which I think deep tech was a sort of the first wave, the first attempt to move away from just SaaS to understanding infrastructure and atoms and deeper technologies. But even then, that's still quite broad.
Yeah.
I mean, what is deep tech is a meaningless term. You see some funds that just invest in quantum computing, or funds that just invest in photonics or nuclear fusion. I think the world will be made up of lots of those micro funds that just know one technology and market really deeply. Number one, because you can actually deeply understand something to the same level as a founder, slightly lower than a founder.
We'll come back to that.
You at least can pretend,
Yeah.
and so you understand something, but then also you can diligence something really well with your network, so you can actually make good investments. And second, you can add value in a way that isn't just air quotes, because your LPs or your former colleagues or your previous investments are all part of that same ecosystem.
Yeah.
So you really can say, once we've invested, we'll introduce you to, in our case, global foundries to help you tape out your chip, or in other cases, a hyperscaler CTO as a purchaser. My view is on the VC side, specialism is the place to be, and on the macro side, semiconductors is massively underinvested in.
Overinvested.
Was over. I mean, Nvidia's price potentially, but that's irrelevant. But just from a VC perspective, it's like a huge gap in semiconductors, and I think over the next decade we'll start to see a way in which we haven't seen in the past 20 years, chips be made much more specialist. Broadly speaking, there's only one type, but two types of chips that exist: CPUs for a very long time, GPUs, and really there's very few other types of chips that exist. At the margins, the bet over the next decade and beyond is that we're going to have an explosion of new types of chips that creates good investment opportunities.
So I definitely want to come back to the kind of smiling curve that you talked about in terms of the agglomerators versus the small specialist funds, because I think it's relevant to wider industrial strategy and how you think about the partnerships that you might want in government and between sort of capital allocators. But before that, let's just go deeper on the semiconductors thesis. You've gone way deeper into this than so many people. If you are a layperson and you've seen NVIDIA explode over the last few years and you go, oh, I guess GPUs are important. Now you know what GPUs are. You previously just had your CPU in your laptop and that's it. What's missing from that story? People may know Intel and NVIDIA, but there's so much more of the story here. Just talk us through the story of semiconductors, I guess, where we've been, how we got here, and then why you think that this is interesting going forwards.
The truth is, Silicon Valley, the semiconductors, is one of the first examples of venture capital. It's surprising to me that it's sort of flown under the radar because I think the truth is everybody was looking at software and the internet. Most people that you speak to, apart from veterans, really grew up in the internet and software age. So most mental models around financing, around innovation, around what a founder even looks like are based around the social network and Facebook and that sort of stuff. It's not so much that it's not been important. It's just been under the media radar or the average person's radar, but it's always been fundamental. I mean, smartphones, right? I mean, ARM. People might not have heard of Qualcomm, but people have probably heard of ARM and how you design chips. Then there's this $500 billion industry, I think, on maybe larger now, probably $1 trillion by 2030. It's this huge industry that is global, one of the first globalized industries, hugely interconnected, but flies under the radar, right? That makes it a good investment opportunity, firstly. But the reason to say that is because it never really mattered to the average person what Facebook ran on. No one needed to know that Facebook ran on, whatever it was. And like how Google was able to serve trillions of queries. No one really knew or cared. And I think it's reached into public consciousness for two reasons. One is COVID and the automotive example. People might have heard of that. It's like, oh, can't make cars because there's this one component that we can't get access to. So it made it into public consciousness. And then people realized how global the supply chain was, how political it was because of Taiwan. And I think there was the book Chip Wars. Exactly. So people started to read that. So I think people realized it's a geopolitical thing, number one. And then number two, before the NVIDIA run up, this data center build out and people starting to realize that AI needs a lot of computing power. When you say, why does it need so much computing power? Then you say, well, a GPU. And then you say, well, what are these compute chips? The reason why I think it's really interesting now is we're still really, really at the beginning, regardless of if you think it's a bubble or not. We have 5, 7, 8 year build outs of data centers that are being bought and paid for that involve buying chips, right? This isn't slowing down or stopping. If you believe in the importance or the value of AI, and I do, I think all of it needs to run on computer chips. I think it becomes one of the most important components, most important technologies for any company or country in the next decade.
And so kind of play that forward. What are the bottlenecks that you foresee the existing chips and kind of chip architectures not being sufficient for?
I mean, it's sort of funny. First principles is never the best way to think about how things are adopted. It's mainly path dependency. But the truth is we are using the same thing that ran the Sega Dreamcast to run large language models. It's just these GPUs, right? It's remarkable, frankly. And that's not quite true.
But what's wrong with that?
Yeah, exactly. Well, path dependency, and it's the same with lithium ion batteries. We can come up with a quote unquote better chemistry, but you can never beat the cost and the economies of scale. So as an engineer, you can always point holes at something and say, well, I can make that better because of whatever reasons. But it is an observation to say we are running these huge models on ultimately something that was designed for something else. It's not quite true because they're not really GPUs now. They have little accelerators that accelerate certain parts of the operation, like matrix multiplications really fast. So they are bespoke to the tasks of running AI training and AI inference. But there's two things that have changed that mean that we probably will start to see the world that I described. I could call it heterogeneous computing. The idea that we're going to have lots and lots of specialized things out in the world. And that's for two reasons. One is that we just can't make enough GPUs. We actually can't make enough. And
Taiwan just not working hard enough.
Well, the Taiwanese don't work hard enough, clearly. What's funny about that supply chain, it's not really the I wrote about this a while ago. It was never, GPUs aren't really the problem. We can make enough GPUs. It's the memory. It's actually the high bandwidth memory that you need, which are only made by three companies globally. It's funny when you look at bottlenecks. You always find a good example is, as I say, it's one of the most globalized industries in the world. If you ever think that we can't make enough of something, and you look all the way down the supply chain, it wasn't really even we couldn't make enough memory. It was actually that there was only one facility TSMC owned that does advanced packaging, where you ship these things to, and they actually put this thing together, right? So within that fab didn't have the right, it wasn't large enough, so they have to build another fab to be able to. So the capacity is always growing and shrinking. And if you're TSMC, you don't just want to ramp up because you got demand now, because what about demand in 2 or 3 years?
Yeah.
So so the point there is that it's this like very orchestrated machine. But you ask, why can't we just carry on with what we got? Well, number one, demand is outstripping supply. And the type of things that we want to do, we need specialist chips. So the reason that I think we'll live in a world of heterogeneous compute is because everyone's chasing server chips, bigger data centers, power them with nuclear power plants, and just stick these really powerful chips with loads of memory in it. And then, but that's not what the world will look like in 10 years' time. The so-called edge is going to be a really critical part of
Can
this.
you break that down? Like, when you say like that's not what the world is going to look like in 10 years' time, talk us through this contrast. Yeah, why?
Well, because if you want a really, really fast response, whether it be in an autonomous car or a drone, high frequency trading, or something in an industrial plant, you can't, for the response to go all the way to the data center and come back. So number one, latency. If you want extremely low latency, you'll want as much as possible to happen on the device, whether that's a robot car or a smartphone or whatever. Right now, we don't have the applications that require super low latency, but we will. Privacy being another reason as to why I think we'll have a lot of local devices running models, so we don't have to send all the data back to the cloud and unencrypted to wherever. Data center could be on any jurisdiction. So we want things private, we want things local, and cost. One of the really interesting factors is that what's the build out? 100 billion. It'll probably exceed that. That was last year or this coming year. We're talking, 500 billion build out for just Stargate. These numbers are extortionate. And my own personal opinion is that the value will justify that CapEx spend. There is still value, but we will need to offload a lot of that performance, a lot of those applications to the user and to local devices. So what I mean is it's cheaper to run a local device on a smartphone, just from an infrastructure cost, and also the user pays for it. The user's paying for the electricity bill, the user's paying for the phone. So there'll be a point from a cost of serving customers perspective where soon we'll start to see as much as possible be offloaded locally. And it won't just be data center and edge. It'll be what needs to run at the edge, what needs to run at the data center, and all of the different performance trade-offs, as I mentioned, latency, performance, privacy, cost, that'll be traded off by the application. So you might see autonomous cars will be an edge, whereas scientific simulations will all be data center. Right, but at the moment, everything's data center.
And are you interested in investing kind of across that spectrum? Or are you focused, like when you describe many of the features that you've just described, feel like the sorts of things that the UK and Europe and middle-sized countries with energy constraints and a whole load of other kind of structural issues, they might be particularly interested in as a way to be able to capture value in this new stack. And it feels like maybe we're going to be able to like fix our grid infrastructure, fix our planning system, and build out loads of data centers. But also, like whether or not we do that, we could also be doing kind of quite a lot more on device inference. Yeah. And like that is probably true across Europe. Or like there's this company, Emerald AI, which is kind of doing like compute workload orchestration so that, you're doing model training runs at the right time based on grid requirements. That's the sort of thing that feels like it would make sense in a sort of like energy constrained, sclerotic state like we have today. And so like, we haven't just talked about yet, like you're focused on Europe, like you're not investing globally, you're focused on Europe. What are the companies that you think will come out of Europe, and how much do they relate to like these factors that you're talking about?
I think that we don't have there's an investment perspective, then there's a Europe and UK perspective. I would say...
Yeah, obviously you're bullish on Europe in public and then in private.
In private. No, because we have to do something. Well, we might as well try. I think that we can't play the CapEx game. We haven't grown in decades. So I'm a VC, so you play the probability. I can get 20 shots on goal. So I'm wrong, 17 times. That's fine. So I'm used to being wrong. That's fine. But also I think in probability. And so thinking in bets, 50% of all AI inference take place at the edge. I don't know, but in that world, we have a shot at the UK and Europe, right? Is it 20? Is it 30%? It probably depends on the timeline. But point being, we can't spend as much as the US, the Gulf, and China. We know that. So let's just deal with the world as it is and take the bet on edge. Now, am I 100% certain? Of course not. But I can say for sure that more AI inference will take place at the edge tomorrow than it did today. And certainly that will increase to some ceiling. So yes, I think your instinct in the question is correct. Like we haven't lost the game, and of course it's in the US's interest and OpenAI and others' interest to just go all in on data center because they can. It's easy-ish for them to raise money. So, but let's not play that game then. And we
Do you not think like there's at least a minimum viable domestic capacity that's required?
Well, it depends on your perspective of geopolitics, the uncertainty of geopolitics over the next 2 to 5 years.
You've written about, say, like, what if NVIDIA or Broadcom or whoever else are kind of banned from exporting to us due to some wider tariff dispute? That I think actually I was reading it earlier, and you literally wrote about like, what if the US wants to invade Greenland and it starts using these economic tariffs? And here we are in this week where like this is exactly the question we're facing. Maybe not specifically with those companies, but the playbook is in play.
Oh yeah. Yes.
Like if the long-term thesis is that AI becomes a critical input to production in the way that energy is or labor is today, and you are basically streaming that from abroad, and suddenly overnight, like your input costs become like 20% more expensive.
It depends on the extent to which you think deglobalization is a structural trend or a fad. I mean, a fad will the deglobalization trend continue for the next 20 years? I can put a probability on that, and everyone will put a slightly different probability. Yes, I've said I think that it's close to impossible to truly have a sovereign stack, so sovereign technology. I think that's coming from a semiconductor perspective. That's really telling because, as I mentioned earlier, this is a complex orchestration of thousands of component suppliers. So the first order you go, well, let's have our own AI chip and let's have our own data centers. Sure, but okay, isn't
that like a little bit binary? Like, definitely get your point about like the limits of being able to leverage these choke points or whatever. Like, ASML is like a massive choke point in the semiconductor supply chain, but the Netherlands can't leverage it because they don't control the defense, or ASML are themselves dependent on suppliers based in the US. So like it's not clear that they have like escalation dominance, but equally, the Netherlands does have a stake in like the semiconductor supply chain in a way that we kind of do with ARM, although maybe it's harder to leverage. It's not quite so physical. Like there is surely sovereignty is a spectrum, not a binary. Like we don't have to go full autarky.
Brexit. We don't have to go all in. No.
I'm not saying we should be self-sufficient. I'd like to be clear.
Fair point. All right, good pushback. I think my point would be you want some strategic assets, and we have to think, well, what are our strategic assets? What are we good at, and how do we grow those industries to be even more strategic? I would say two things. What we're not good at as a state, and I think what Europe is, I don't know if this is true of the political class more broadly, but you need to think, what will be strategic in 5 years, right? Not what's strategic now. Yep. And we can get back to that because I think that's important. And beyond that, do we have the stomach, both in terms of capital, but also in attention to think about this over the long term, which is what China's particularly good at when it comes to quantum, when it comes to semiconductors and other things, which is to say, you need a very clear industrial strategy. Isn't this next 3 years? We need to make sure we've got a 20-year roadmap. Right. And if you really want to do this and build out capacity, it's going to cost money for 20 years. You can't just suddenly get FOMO'd into doing industrial strategy because everyone else is. And when it comes to the AI stack, as I say, if we were serious about it and Europe was serious about it, we're not doing anywhere near enough thinking about what that means. It is not a AI chip, and it is not a AI interconnect. It's half of the battle. As my joke, I was in the subset, like, who's your neon guy? Where are you getting your neon from? Right? And they're like, and so it's sort of,
there's interdependency all the way down.
Turtles all the way down. Exactly. So let's the world as it is. So to your point, what are we good at? What could we be good at? What could the choke points be, or where we have the equivalent of an ASML? And this is where, being a VC, you have to look not what, as I say, what the world is today, and think 3-5 years. What markets, what applications, what customer demand will exist that doesn't exist now, that's likely to grow, and in which case, what is the UK or Europe currently producing but at low volumes? It would require government support to grow to the point at which maybe you would find external capital. This is a really hard pitch to make, and I can make it's really specific. Compound semiconductors, which I've written about. Compound semiconductors is basically, instead of using silicon, which is what all of our chips are broadly made from, use other types of materials. So things like silicon carbide, which is a different material, gallium nitride. Each of these materials has a different property which makes it useful. They are better at running hot and at higher frequencies. So you can't stick a silicon chip next to a battery, it just gets too hot. So you use other materials, silicon carbide or GaN. Think about, electric cars being a really good example. What about the chips inside? You don't think China were thinking about that 10 years ago?
Yeah.
Right? And so that's just like an example. But we do have very good compound semiconductor capacity in the UK. We're very particularly good at it at Cardiff. Down in Cardiff, we have a great ecosystem. We have some companies that are sort of leading in this space. The reason I tie this back to the government focus is because I've looked at lots of compound semiconductor companies, and with my VC hat on, I look at pretty small markets, pretty small growth rates, limited number of buyers, a couple of EV in the UK, and I think, that doesn't seem like this developer tool company around the corner that's growing at 100% year over year. It's not the best place to put my money. That is a place that government should be thinking.
So I want to tease this out a bit more. You've just launched a semiconductor fund. Where do you see, for the companies that you're speaking to or the ones that you've already invested in, who are the bigger customers that are buying their products? Like, there's existing demand in like the semiconductor ecosystem today, and you think there are new companies that can be founded to kind of serve that existing demand but better?
Yeah.
Or are you also looking at new applications, new use cases, growing parts of the market where there will be new customers coming to the fore?
Yes.
Enabled by some kind of new
chip design.
New chip design that it is. Like, how much are you at a high level with your thesis? Like, do you have a rough kind of weighting towards one of those two?
Space is a good example.
Interesting.
Put chips into space. We do, but they have to be radiation hardened because space has radiation. So that's pretty tricky for silicon chips to deal with. We can stick more chips into space. That's not to talk about sort of this idea of like
so specifically for the compute of space operations, rather than, I'm also thinking about like quite a lot of people in Silicon Valley now being like, we need to actually make chips in space.
Well, I mean, that's an interesting. We have a good company, Space Forge, that is trying to do this. There are some benefits in terms of gravity, in terms of like solar power, but that aside,
pure planning restrictions in space.
Exactly. I mean, that's interesting. I'm not sure if the economics actually make sense in just doing it on the ground, but certainly we have these satellites that are very underpowered in terms of what they can do. And also, if you think about the round trip, I mentioned latency, the round trip to a data center, the round trip up to space, it's costly. You don't want to send much up there. So there's some really interesting designs and thinking about, well, if we wanted to put a more powerful computer up in space, how would you do it? First, how would you design it? Some of this is sort of called like, stick compute in the sensor itself. You can actually do some logic or operations within the sensing data. Imagine this: you take a terabyte worth of data, right? And instead of right now, you would send all of that back for processing, and then you would send the results. But if you could do some processing at the edge or on board, and it turns out the only important part of that is the bottom left, whatever it might be, then you just send that back, you save yourself a fortune in terms of cost. So that's just like one example of, we don't really have specific specialized chips for space, but we could. Another really good example is, and I think this is going to be a much larger part of the fund, is photonics. Computing with light. We already move pretty much all of our data around the earth over fiber optic. So we already use light to move data. As we get better at building little lasers to make the light, and as we get better at building little modulators to modulate the intensity, the photodetectors to know if the light is on or off, all of these things are getting smaller and smaller and smaller to the point in which relatively recently we're able to stick all these on a chip. called a photonic integrated chip. This is all very immature compared to silicon, which churns these things out in the trillions. It's still hard to do. It's still quite complex, but we are getting to the point now where we can put all of these components on a chip on a different material. It's generally not silicon. What can we do if we can shrink these lasers and things to smaller and smaller sizes? Well, a whole bunch of things. If you're wearing an Apple Watch, you've got an image sensor on the back of that, blood and sensing various other biomarkers. If you have a more powerful, like photonic integrated chip, you could sense more biomarkers. Any sort of wearable device will be seeing more and more powerful chips.
Yeah.
So they're just two examples, and you can think about autonomous cars or robots as other places for which we're probably not going to stick GPUs in the next 5 or 10 years. That's just a couple of new application areas that we can see whole new chip companies.
Interesting. I want to unpack a little bit more about the fund is a $30 million fund.
Yeah.
And you talked about making kind of 20 bets, give or take. Talk us through the fund sizing. You were talking a little bit before about like some of the massive deals in this space. I'm interested in, if I'm someone that wants the UK to win in semiconductors, I think funds that invest in UK companies in semiconductors are a good thing. Why have you right-sized your fund to make that work?
Well, we haven't, have we? Is the truth. I mean, maybe that's the question. I mean, it's not for lack of desire, ambition, or willing. It's an MVP to prove that this is important. You know, just like any startup, I see this as a pre-seed to prove, you know, and what validation points do we have in 24 months that prove you should give us more money to do this bigger and better and to scale. That's sort of the best way to think about this. It's not right-sized. It's too small. A good data point recently is there's a company in Europe raising a 200 million seed. Etched, which is public information now, which is an AI chip company, raised a 500 million Series A, I guess. And some of those numbers are signal. We are serious, but also some of those signals are we're taking on these big chip companies. You know, we need to have a lot of capital, both for hiring, but also like, actually going to a fab to make chips costs a fortune. There's an interesting thesis about how do we make chips cheaper to make, which is like how do we get away from the fab costs 10 billion? Why doesn't the fab cost 100 million? It's an interesting series of challenges there. But broadly, the world as it is now, you want some tape outs, might need 100 million, like for like advanced nodes, which is like the most, if you wanted very small chips for smartphones or for AI chips. The point is, these things cost a lot. So what can we do with 30 million? Well, we have to be very early and because we're specialist, we can go earlier than the average fund because you'd like to think we roughly understand the markets we're operating in. The second reason why I think we could be more capital efficient, I don't know if the right number is we could be a £50 million pound fund or 100, I don't know. But we do have strategic investors that we can introduce to our portfolio where we can give them services they wouldn't be able to get elsewhere. So one of those is Global Foundries, the third largest fab facility in the world. And we also have a Taiwanese photonic company called Radiant Optoelectronics. We can introduce our portfolio to these companies and their surrounding ecosystem to do things faster and cheaper. So the hope would be, without us, you'd have to raise 5 million. With us, you raise 2.5. You know, we could be more capital efficient, but I'm not here to say that that's anywhere near enough, especially for these frontier AI chips. Now, we've spent quite a lot of the interview talking about one important but small part of the broader semiconductor space. We could be talking about Wi-Fi chips or innovation in sensing, you know, hyperspectral imaging for drone warfare. We could talk about loads of other things where you don't need 100 million, but you're talking much more sensible, deep techie type numbers. You still need millions, but you don't need hundreds of millions. If we were only investing in AI chips, you probably want a $200 million fund to start, but we're not. And there's loads of other spaces that are small, will grow, and you can invest 1 million.
I think it's interesting because you, maybe to go back to the point you started with, explaining the fund, explaining the specialist kind of focus and structure, there's clearly been this massive shift underway over the last few years. You have, as you call them, the agglomerators kind of hoovering up ever more capital, and actually also like ever increasing returns to scale because they can invest in the product, they can add more value, et cetera, et cetera. And then at the other end, the sort of specialists, and maybe the messy middle eventually gets washed out. We'll see. But when you think about that context, you know, if that's one trend, and then another trend that you've definitely kind of thought about quite a lot is the increasingly close relationship between governments and particularly larger capital allocators. It's kind of interesting if you're looking at this from the perspective, not just as like the GP in the fund, but from like a government perspective of how do we secure sovereignty in AI? How do we invest well? How do we understand how the market is shaping around us, restructuring around us? And then like, where is the best place to intervene? And so in the UK, the government has been proposing, or is launching SovAI, this new strategic venture fund for AI basically. And it's not just investing in AI chips, it's going to have a wider remit. 500 million, a mix of both capital and in-kind support. Based on the reflections that you sort of thought about there with Cloudberry, how do you think about applying those lessons to the government side of things as well? Like, what does it, you talked about like with industrial strategy, you've got to be thinking 5 years ahead.
Yeah.
And like,
yeah.
Made in China 2025. Right. It's this long-running strategy, and it's not impossible to do industrial strategy. I think there's a lot of people who sort of like reject it on the merits, but it requires the capability to do it well. And if you have the capability, you can be more ambitious. Mm-hmm. And this is SovAI is an exercise in capability building. Like, what do you think is required to make that work well?
I think that the single biggest challenge is that any way of thinking about industrial strategy, and us talking about it here, is top down. It's define the specific things that everybody agrees are important and then allocate money to that. And that is sort of fine if you're talking about manufacturing, agriculture, or whatever we want, our own domestic food supply, because it's a relatively slow moving space and industry. So this idea of like top down, this is important with some degree of certainty, go ahead. I think you cannot do industrial strategy in 2026 by saying this is 100% important and this is 100% important, because we don't know. So the key insight is that government and civil service are inherently not good at thinking about high levels of uncertainty and making bets, because that's ultimately what you have to do good industrial strategy in the age of AI, but more specifically the age in which things are moving faster because of software and the internet. So the first thing you'd have to do if you were SovAI or you wanted to do anything is to understand that you have high degrees of uncertainty. You don't know all the answers when you set out. How do you address that? Well, you have two things. One is velocity and one is adaptability. If you don't know what the answers are and everything moves fast, you have to move fast. And the second thing is, for SovAI, for anyone else, is adaptability. That is to say, if you take bets, you will be wrong. So it's not about taking the bet, it's about the process. It's about understanding what did we get wrong in the process that we can improve, but still aware that the bet might be wrong. So I'll give a good example, quantum computing. If you're going to have a discussion about strategic autonomy, you're going to have a discussion about what's going to be important in 5-10 years. The obvious candidate will be, let's invest in quantum computing because that's the next thing. Right? If you own your own quantum computer, ...
Yeah.
Autonomy, ... profit. The dots are doing a lot of heavy lifting. Maybe it's a bet, but the point is we don't know. And even more than that, it's like, which type of quantum computer? Are we talking about trapped ions, superconducting? Well, there's no answer.
I'm a fan of industrial strategy done well, I should say. But I remember kind of having conversations with policy people a few years ago saying like, oh, we need to kind of invest in like, they would pick up themes. Yeah. It's like, no, you can only invest in assets. You can only invest in companies. And like, that is the sort of top down, we need to invest in themes.
Mea culpa. That's what I was bad at.
Interesting.
So that's the learning, right? For me, over however many years I've been investing, a decade or so. My title was always head of research, right? If you do enough research, you could be super smart and you could pick the right themes before anyone else, ... profit. And okay, there's a part of that. Part of it is understanding, what a quantum computer is, and how do you trap these ions or whatever, right? What is the superconducting logic? You might understand it, fine. But I think a good learning was with a nuclear fusion company that we were looking at. And maybe like the hubristic approach is, I'm going to go and speak to 20 people in nuclear fusion, and I'm going to understand, is this the right bet? I mean, it's not to say all 20 gave a different answer, but all 20 gave a different answer. Yeah. And so venture is a great example of where you go, okay, well, we're happy with, lots of degrees of uncertainty. So we're happy to take the bet regardless. But I think a top-down industrial strategy, and coming up with a theme is the idea that you can somehow predict the future, or you bet on these themes and you win. My learning, having done research and done all those themes, is that's probably the wrong way to do it. Actually, really good founders will sniff out opportunities. If you're in touch with the ecosystem enough, ideas, themes will bubble up, or companies will bubble up. And if you're bottom up, which is why the BBB maybe you touch on, was a really like underutilized resource, because if anyone has access to the entire ecosystem bubbling up, you can understand on the one hand, okay, we think quantum. On the other hand, let's just speak to everybody in the ecosystem.
BBB is the UK's largest LP. I think it's invested in like nearly a fifth of funds in the UK, and therefore it gets a quarterly report from every one of those funds with, it's not perfect information, but like it is sitting on like the best data set of the early stage venture ecosystem.
Can't we connect
in the
this
country.
up to Claude Code like now, yesterday, and then we'd all get the answer, get the answers.
I literally used to fill in the quarterly reports.
Right.
And I'd be like, this is how the company's doing. These are the commercial bottlenecks. These are things that they're doing well. Here are some policy and regulatory things that could be relevant to them. And we have that information, and then we don't do anything with it. And part of this is about capability. But can I just ask you, I just want to go down a rabbit hole a little bit on what you said before about, you can be looking at something like fusion, you can speak to 20 different experts, they each say something different.
Yeah.
And I really, really relate to this point. There's a thing I've been trying to kind of articulate, which I'm going to roughly call domain elasticity. Partly like...
Sure you are.
Partly about like, if you look at founders who have basically been incredibly successful in one domain, how do they switch from that domain to another domain and still be successful? Like Elon Musk is a good example.
There's very few that do, is the answer, I think.
Well, yeah, okay. Well, that's interesting. But like if the job of a VC is to find the people who are capable of doing it, you look at the Boom Supersonic CEO.
Yeah.
He goes from Groupon to founding a supersonic flight company. It's kind of interesting. What is it about that person? It's not necessarily that like while he was at Groupon, he was actually a supersonic like physics PhD,
right.
but he just had some other skill set.
Yeah.
And then the flip, like just to kind of couple that with, as a VC, you're speaking to founders across a whole range of different domains every day, who in theory should probably know more about what they're building than you will. You might kind of have like the breadth, but each one of them will have more specificity.
Yeah.
And so there's always going to be some gap in knowledge of how do I build conviction in this person to go and build this thing.
Yeah.
And you, more than most people, have gone deep onto the research to be like, I'm going to get as close as I can to understanding the products and technical hypotheses that this person is coming to.
Yeah.
But not every VC will have that approach. They'll have different approaches, or they'll go later stage and try and wait. Like, they'll have it de-risked in other ways. Like if you are part of what I'm trying to do with these podcasts, particularly when we have more founders on, is to try and help policymakers and other people in and around this sphere understand why some companies are credible and legitimate. And basically, I think startups are always playing on hard mode. They don't have the brand recognition, they don't have the reputation, etc. Quite a lot of other people very reasonably will go, well, I know nothing about what you're building, so I don't know why I should believe you when you tell me that the nuclear fusion company you're building is actually real. Yeah. I've been in meetings with very senior foreign policy people who would love us to fix our energy policy, but then whenever anyone mentions an SMR, they're like, can I see one, please? Like, I've never seen one. They just keep being promised to me, blah, blah, blah. And so it's really hard for them to overcome this sense of, why would I believe that the constraints which you're telling me are going to change will ever be broken?
Yeah.
So all that to say, when you are thinking about new classes of problems, new founders who are sort of like some, like, I don't know, step beyond where you are on something, like how are you building conviction in someone and understanding them to be credible and legitimate in a way that like maybe other people can learn from too?
Yeah, I did the project probably 5 years ago called State of the Future, which is still the name of the newsletter. The conceit behind that was, and this was before LLMs, which sort of rendered it pointless. We looked at 150 technologies, which actually respectively the wrong way to look at innovation. You speak to an academic about how innovation happens, but the truth is, like, there's a WhatsApp group and someone shared a term sheet and said who's in. Like, I'm not sure that matches how we think this is done. We should be looking at problem statements, but regardless, or whatever. I looked at the technology. So everything from like brain computing interfaces to chiplets, these little Lego blocks of how you make chips, to mRNA vaccines. So like really, really broad. And the idea was to try and identify a couple of things within each. So I would look at sort of the technical maturity of some of these things? Was there a market catalyst? Was there something changing in the market, whether it be technical on the supply side or on the demand side, like a consumer behavior change, like clean meat would be another example of where the consumer behavior changed. Look at how different the technology is to what already exists, so novelty, and then impact. How impactful could this technology be? Is this a $1 billion market? Is it a 10? Is it 100? Is it a trillion?
The founder is necessarily almost, well, if it's a venture backable company, they're coming with a contrarian hypothesis. You speak to all the existing experts and they go, well, that won't work.
I'm not an expert, but I can tell you something about something you don't know, which might be relevant. This is all around how you commercialize an innovation.
Yeah.
Right. It's not so much about the specific innovation and some of the market challenges, consolidation of the market, or how many buyers are there. They're all pretty standard things. But so you can tell them, so you can help them understand how they sit within the broader context, which I think is really useful as like, you know, I've looked at lots of technologies, but I think the learning really to how you can sort of sniff test is that most of the fund returners, most of the outliers say pretty outlandish things that if you're asking experts, the experts will say is probably not plausible. Right. So this is the exact game. And which is why VCs can often look stupid because you back potentially stupid things. So number one,
all the experts told you it wouldn't work and it didn't work.
And it didn't work great.
Yeah.
Well, of course not.
Yeah,
exactly.
Yeah.
So I think, but there's,
what's the like Nat Friedman thing? Like pessimists are right, optimists make money.
Yeah, exactly. Yeah. And I think, it's a good one. How we do that is just, I like to think it's the trade. Like if you've been doing it for 10 years, speaking to 10 founders a week, you've got a really large data set for which there's right now some intuitive view of, is someone bullshitting, right? Which is a reason you can get yourself to some level of this person is bullshitting. And then below that, really it's like, will this work? It depends when you're investing. At our stage, will this work? Maybe. Is the market big enough? If it works, yes or no? If yes, okay. And then you proceed down that route. And this is what I mean about taking bets. If you're doing it early enough, you are almost certainly going to find one or two people that say this will never work. If you are used to risk mitigation, if you are used to not wasting taxpayers' money, if you are used to betting on certain things, then you can always find a reason not to make an investment. And you can always seem smart because I spoke with someone at X big company that you've heard of and they said it will never work.
Yeah.
So I can feel good now. Right. Yeah. That's the challenge. And I often find that's the challenge in hiring people as well, like hiring people who are prepared to stick their neck out a little bit. It's really high degrees of uncertainty and being very, very comfortable with being wrong a lot. That's not how we're taught in British education system, I would argue. Being wrong is hard.
And you also made this point before about like, if you're, protecting taxpayers' money, like I think when you were writing about SovAI, you were sort of saying there is always a reason to ask for more data, more review, more process. And that might go against the velocity that's required for that particular institution to succeed.
And I'm pretty radical about this, but also like I totally understand the incentives. Because there are no incentives to be fast and be wrong.
Yeah.
The incentives don't exist, and they barely exist in venture capital firms. The truth is, some of this is just structural. Fund one, if you're investing in weird things for whatever reason, you have some alpha, and then
you got something to prove.
By fund 2 or 3, you've put processes in place, a bureaucracy to avoid failures. It's very much a structural problem in all institutions. So it's no surprise, in my view, that this happens in institutions that have been around for centuries.
How do the three of you at Cloudberry make decisions?
Well, I've got a few different learnings from different funds, which I'm trying to take with me here. And and I think there's lots of ways to make money, frankly. You could be consensual, you could be lone wolf. The key is having really different, like coming from different places. By that, I mean, if we're thinking about what our fund looks like, I'm the one that's going to, I don't know if this is right or it'd be interesting. I'm not sure if this is right, but I think I can put myself in the mind of other VCs. I think
invest in things that will get markups because other people like them.
Maybe.
Yeah.
but it's one way to play the game. I think
I'm just quoting your Substack.
Quoting my own Substack, quote me back at me, which I think could be helpful. We might end up, converging on the same things.
Yeah.
I think that Rene and Vera are better at, understanding what other semi-customers might want. Semiconductor customers, like what will a customer want?
Is that their background?
What will a CVC, exactly. Yeah, so that's their background. What will a corporate venture capital firm be interested in within the ecosystem? Operationally, Rene has built a company and sold a company, so he understands lots of things that I don't. I think what I do at Pre-Seed is I invest X amount of money to get to Y milestone. That's the key thing I'm doing. Identify what is X milestone, what does it take to get there? And once you've hit X milestone, who will invest to get you to the next milestone? If you can reduce the complexity to that, you can then think much more clearly about, okay, 2 years, 3, 4, 5 years down the line, the uncertainty continues to go up. What can I really think about?
Do you think that relay race effectively, as you're describing it, like I invest so that the company will get to the next stage and then someone else will come in and like help them get to the next stage? Do you think that relay race breaks down when you have these structural shifts going on between the smiling curve of like the specialists and the agglomerators? Like, are the agglomerators just going to like, are they going to come in at the seed and then back them from there? Is that how you see it?
No, because if you think about institutional bureaucracy, I think then why not wait?
Right.
Why not wait to A? We can de-risk it at A and then we can give them 50 million. So it's, I think actually a better way of thinking about it, venture capital, like investing in truly unusual things, new markets, is venture capital, and anything maybe post B is private equity, growth capital. Is different. And I think we have to think about that as probably bifurcating in a way that it hasn't before. And if it does bifurcate, then could they come further down and do seed? Yes. But it doesn't materially move the dial for them in terms of like, what's 1 million in a 15 billion fund. So they
also,
could.
as a founder, you're just like a tiny part of their portfolio.
They're not going to how they can happen to be on WhatsApp responding to your messages at midnight or whatever. So I think there's the specialists will always be there. But I do think if that theory of the structural change is right, the smiley curve, you really, really have to know the rest of the capital stack. The relay race is maybe a really good analogy because you really need to know who you're handing it off to. And I think my previous view through investing in a theme of venture capital, the theory is invest in the theme and you get the timing right and the market emerges. And of course, follow-on investors will arrive because the markets arrive. In the perfect world, you've invested in the right theme at the right time, and by the time they hit A, they've got 1 million, 1.5, 2 million revenue, and it hits. But that's the perfect world, and in most cases, that's never quite right. So you can de-risk it by speaking to the AUM aggregators, the later stage investors, getting a sense of what's interesting to them, what will move the dial for them, what are they interested in, and trying to match it up. I'm reluctant to go all in on that as the game because it's a sales game. You hand it off to someone else, you get markups. I don't think that that's how you build a sustaining fund. If Cloudberry becomes fund 5, fund 6, I don't think it's because we did that well. I think it's because we did back sort of unusual companies doing unusual things, outlier type people. It wasn't obvious who the next investor is. You have 20 bets, and I don't think you can take 20 bets on weird, funky, unusual people where you have no idea who's going to invest next, because I think that's probably too much risk to take.
Yeah. I think it's pretty interesting that you're doing this in Europe and that you're so bullish on the opportunity to do this in Europe. Can you just say a little bit more about kind of where that bullishness comes from?
We have to do something. I don't know what to tell you. Honestly, because I'm terminally online. No, I don't think it's because I'm too online. But
I mean, Europe already has like a strong semis ecosystem, and it can be even stronger. I think there's a very good case.
I make the financial case that I think that Europe has this huge talent base. Well, okay. Well, number one, I'm pretty radicalized to the fact that Europe needs to wake up, and we're in an age of deglobalization, and strategically, we've been reliant on the US for too long. Hopefully, one day we can rely on the US again, but as it is today, we need to invest in our own capabilities.
Would you call yourself a patriot?
Are you trying to think about how we can reclaim that word?
Yeah.
Yeah, interesting. I mean, I think there's something interesting from a reclamation perspective, how we can regain that from as liberals. So yeah, for certain a patriot, which is why this Europe-UK thing is interesting, again, for me. Now, first and foremost, I think of myself as a Brit. right? Not European, but for sure our European partners and colleagues, and this is a Finnish fund, for sure this is a European play. But from a UK perspective, I think we sort of just sleeping for too long. Hopefully it's not terminal. Hopefully we can wake ourselves up again. But I'm radicalized to the idea of we have unbelievable talent, R&D, like number one, technical R&D talent. We have Eindhoven, we have Bristol, we have Southampton, Oxford, Cambridge, Munich, lots and lots of really deep pools of talent. What we've lacked, and I think this is the bet I'm making, what we've lacked is enough ambitious founders that want to win globally. I don't think that's because they don't exist. I think that's because they were defanged. I think their ambition has been reduced because they were too busy talking to EIS funds that were saying, where's your P&L at pre-seed? So number one, I think the founders were there, but they've been slowly battered. And so they asked for, 800K because that's all they think they can get. I think Cloudberry and others, plural, namely, but there are plenty of others out there saying we can be more ambitious because we have ambitious investors too. So number one, I think the more we shout about the fact that think big and we'll back you, I think that means we can enable people to return to their natural ambition, right? We don't need to create more founders. They're there. And number two, I think a lot of them went to the US, quite rightly. That would be how I would de-risk my company 2 years ago. And now they don't. So they're here. Let's give them the capital they need to build the businesses here.
I think there's this concept in evolutionary biology called niche construction. A good example of this is beaver building a dam. It's like there will be one organism that intervenes on their ecosystem, and that intervention means that the ecosystem sort of like reshapes itself around them. And there's something in what you're doing, Plural, and like a few others, where there is a sort of like unreasonable belief and ambition relative to kind of like the status quo that is creating value because there are founders that no longer have to go down these like slower paths, and they can believe in themselves and go down the ambitious path. And there's just something interesting there about like, part of what we're doing here is figuring out how to solve problems through company building, through capital allocation, and through policy and government. Understanding actually like the craft of building a venture company is interesting in and of itself. Like a venture fund is, Cloudberry is itself a company. The journey that you've gone on to kind of build it and the intervention that it can have in the ecosystem is kind of interesting.
The thing that makes me think of is peculiarly European and British thing, but maybe this is why people head out to the US, which is, it's not necessarily the tall poppy syndrome, but there's definitely something in our reflexive culture, which I want to build $1 trillion company. People laugh at that.
Yeah.
There's some instinctive skepticism in that somehow. And I think the US do it well. I think I'm not here to change culture because one person doesn't change it. But there is something in a small group of people, for which I think you're collecting, pulling together, small group of people that do shout it from the rooftops that say like, we don't have to just accept declinism anymore.
Yeah.
We can build a new city in Cambridgeshire.
Yeah,
why not?
yeah.
And actually think we're going to build $1 trillion company. How are you going to get all the team? How are you going to raise the money? Well, yeah, we'll figure it out. Like this sort of bullishness. I thought that I would be more bullish in my 20s, and then slowly you become more conservative and less bullish. But for some reason I've come out the other end and I'm like, well, we can't just keep accepting this. There's many, many more people like me, maybe my age or not, who are thinking like, why are we just accepting this declinism? And like, we need to shake people out of this is the way it has to be. And a good example is all the stories, what did we get for GDP growth? 0.1%. And it was written up like, good day for Rachel Reeve, good day, 0.1%. But there's no context. Yeah. Okay, if someone said we want to aim for 7% is ridiculous. Right? let's say 3%. Let's say 3% or 2.5%. I mean, ask Gario.
20 years. Yeah.
Why not? Let's say we want to aim for 3%. Yeah. And that is the target. You get laughed at. Yeah. But I think there's that sort of level of ambition, not just from politicians. I'm sure politicians would like to say that, but they would get killed for doing so. I think you can sort of do the same on the ventures, and it's a bit easier to say we're going to build $1 trillion companies. Want to do it in the UK, and we're going to invest in them. And we're going to help them be ambitious to do that.
But I think what you're speaking to there is a really interesting cultural difference. If you have a financial stake in being optimistic and experience with companies who are like, no one knows who they are. They have no reputation. And then over 5 years, they become global winners. You believe that things can change quickly. Whereas I think if you often don't have that, and you know, governments have a lot of other things to think about and care about as well, but it's really hard to believe that the future can be radically different from the present day. There's a culture that you're sort of inculcated in that is transferable, is important for actually raising ambition. There isn't enough of it.
Yeah, like how do we change? I've thought about this from a political perspective, which I'm treading dangerously outside my realm of competency, which is my job as a VC. So
Yeah,
I will
of course,
continue.
yeah.
What could I do before the next election in the next 2 years that the average person would feel like things are changing? One idea is everybody sees autonomous cars on their streets, right? And then we say, well, the taxi drivers are going to revolt. Sure. But things can change. There's an autonomous car on the street. That's cool.
Yeah.
That's interesting. That didn't exist.
Yeah.
That's a new technology, a new enable that's going to bring lots of problems. It will run over cats. That'll be on the Daily Mail headline and everyone's going to say.
But they're also safer than most cars.
Well, exactly.
Like,
Logic doesn't, well, will not win that argument.
It does on this podcast.
Okay, logic wins on this podcast. Well, this is a safe space. What could you do to say the future will be brighter?
Yeah.
How do we go back to like the atomic age, the future armor, like the future?
Yeah.
I think that's the missing link. And I can't do it from a semi fund, like a semiconductor fund is a part of it. But like,
Okay, maybe you make train Wi-Fi possible.
train Wi-Fi is a starting point. Then nuclear
Super
fusion.
visible, tangible. Yeah, nuclear fusion and train Wi-Fi. Let's have both of those by 2029.
Fix the potholes,
Yeah.
and then and train Wi-Fi, and then fusion on the other end. But like these things
Visible,
should be
tangible
positive.
things.
Yeah,
Yeah,
visible.
totally
Exactly. The autonomous cars is the only one I could think of that
But
could
like,
actually happen.
There's tons of others, like, you know, clean meat in supermarkets, drones that fly beyond visual line of sight.
Yeah,
to
and
do
that's
logistics.
licensed.
Like,
Yeah,
so,
drone
like,
deliveries is a good one.
There's a whole chunk of things like AI medical devices that are currently, like, again, like there's a whole load of stuff across our regulatory state that is like interesting, super important. These are markets that matter. New technologies and companies can kind of like improve our lives in such a visible, tangible, visceral way.
Do you think
that drives a wedge between like that and just like the social media giants that people kind of like have an aversion to?
Yeah, but you're
and, like,
touching on
drive
it
a
there.
wedge.
And AI.
Yeah.
People have, well, this is the question, and this is the pushback when I floated this to autonomous cars. Like the public won't like that. And the extent here is the leadership, say like leading people into the bright future, the bright light of technology. Things will be better. I think that if you were to do that, many of those things, the drones, people would complain about the noise, they complain about the risks. And I think it would be a negative view of it, not necessarily a positive. So here I am, and we are as technologists saying this would be so cool. I think there'll be an immediate pushback on this isn't cool for all these reasons. And it's hard to know how to. Medical devices might be the one, you know, get cancer diagnoses, you know, down by 100 days or whatever. I think there probably are ways to make it much more positive, but the instant reaction would be a negative one.
If we stay in this model of like nothing ever changes and we never have any of the visible signs of progress that then give people a stake in like things can get better, then we'll end up in this, we'll stay in this terminal valley. Nuclear fusion, fix the train Wi-Fi.
Well, I've set up a semiconductor fund, which I think is an important element to this, but because a lot of what you've described is relying on semiconductors. So if we want to make people's lives better, we want economic growth. I think, I mean, yes, also I think a nuclear fusion could be part of it, but that's a longer term horizon. The core engine, I mean, of economic growth over the next decade will be how we turn energy into intelligence. Like, I mean, to like summarize the whole thesis behind this is we'll have energy and that's a problem, but then we need to turn it to intelligence, both whether it's in the data center or in cars or whatever, but turning it into intelligence, that's a silicon problem. That's actually how we make the chips, right? But broadly speaking, how do we turn it into intelligence? And that is the defining question of this decade for me and for the UK and for the policymakers.
Good luck.
I'll do my best.
Thanks so much for coming on, Lawrence.
Thanks.
That was Lawrence Lundy-Bryan, GP at Cloudberry VC, Europe's first dedicated semiconductor fund. And frankly, for the UK to win, we're going to need so much more of his energy. Over the course of this year, we'll be speaking to more founders, investors, policymakers, writers, artists about how we can raise our collective ambition for who we are, where we're going, how we get there. So please share your feedback, small or large. Help make this as good as possible. Like, subscribe, share, help me toil in the content mines. And as always, thank you to the Centre for British Progress for supporting Sovereign Albion, to Julia Willimans, David Lawrence and Alice Key for editorial support, and to Podcast House for production support. Until next time.